Okay, let's look at what I call the heart of this whole MACD 4-hour strategy or system. In the beginning, there was a lot of emphasis on the MACD, and the only reason for that is just to give you an indication of what is happening with the price. I very hardly look at that anymore, because when after 16 years, that was, is it 16 years, to be 100% sure, yeah, somewhere around there, let's say 12 to 16 years, that I'm studying this, or looking at the euro US dollar, and at graphs in any case. I mean stocks, I'm trading stocks since 1994, if I remember correctly. And and I'm using this whole sort of system from the very beginning. I only started with it, I think, in 2006, 2005, somewhere around there, using it, look whether it can work on the on the forex. And then I came to the conclusion, this is the way that people are thinking. That's why it's called a market rhythm. It's not so much a strategy that you say, if this is in place, then that's going to happen, and that, you know, after time you start learning what's going to happen. And then you can, not what is really going to happen, but you can anticipate certain things. You can say, right, if this happened, then I've got that in place. If that's happened, then this is what I must do. That's why I was so cross with me. Sorry for that, I started coughing, so I had to quickly stop it. I was cross with myself when I listened to what that guy has said. I mean, I went short right there on that candle coming from this long-term sort of support line right there from May already. And I think if you go to the left, you're going to see that it actually comes way back. So if you have mastered something that you feel comfortable with, it might not give you the same result that that guy gets, because he can sit, he most probably has got a lot of money, so he can sit it out. But for me to do that, I mean, from there right up till there was 89 pips. I think it was over 100 pips that I had to try and gain back the. I could have got out of it, but you see what happens is normally the stop, as I said, was right up there, and he had the gain down here. So it was quite a huge. It was more than a 2-to-1 risk reward. So it was a very good one. It might eventually work out if you had your stop up there. So for me, it was just not. I was very cross with myself, and I actually closed it as I went upwards. First a portion of it, and then another portion of it. And eventually I came out, I think it was 43 euros at the end of the day. But I'll post the results so that you people can see. Right. What is the market rhythm? It means that certain decisions of people keep coming over and over and over again. One of them is, and that's one of my favorites, is the TC is the most certain one, but it sometimes is very difficult to decide. It is a TC. I mean, you don't get it as beautiful as that. If all the movements was like that, everybody will make money. That is the best you can get it. You can see there. It break out, pull back, move away. But now Do you enter on that little small little candle there? I just want to put that off, otherwise it's going to scroll back all the time back there. Or that one. To me, that was the pullback, the first red one, 4-hour candle, although it was only about 20 pips. But now it ran 66 and then it started pulling back to 13 pips. Would you have sit that out? That is what you must decide. That's what you must build into your plan as well, within the whole market rhythm. I mean, if you bought something on an auction and the price keep going against you, at certain stage you have to decide, right, I'm gonna take it. I'm gonna take what I have on the table, and because this has already shown you that this is coming down. Even right over there, because if the price have been ignoring the moving averages, you can see there, and that's another rule that I want to bring in before I carry on. That is, if the price ignores the moving average, then you have to look for some support and resistance line. I'll call it demand and supply zones, where people are prepared to sell and where people are prepared to buy. If that is broken, you can see there's the 200 moving average, there's a 21, it came below that support line or a demand line, it broke it, so there's more suppliers than the people wants to buy, and then eventually it pulled back to the 21 and then it started coming down. So that was Friday afternoon, that's where I would have closed. See, that is, but it's easy to look at it when it has already happened. That's a question. It closes right on the 89 SMA. Would you sell there or would you bought there because it's on the 89? See, that's things like that you have to write it down and say, right, it ignored the moving averages. I'm talking about the 200 and the 89. Somewhere around there, it still kept with the 8 EMA and somehow with the 21, but the 200, the two main ones, was ignored, and it honored that those two lines there. So to me, that is the area that was respected by the market rhythm. And when it broke there, then that 89 to me doesn't play a role. If you really wanted to wait, then you could have tried that one, pull back to the 200, and when it started coming past that one, you could have entered there. I mean, I would have taken 50 pips. That is 25, so it's a 2-2-1. And then the breakout we talk about, and then a move down. So this is very easy. And one of the rules is, when it gets to the end of a trend like this, the price tends to close above the 21 moving average, the EMA, pull back to it, or even just below it, and then it goes back to the 89. And in this case, it just kept coming back. Another thing is, on what moving averages does the TCs occur? Do you wait for the candle to close on a run like that, or do you put a sell limit order there with a 20 watt stop loss, and you can see there over 100 pips with the 20. So that's the type of things you have to decide for yourself. If this is such a strong down move and it's news driven because of something that happened, you can see there, why did the price do that? It was the buyers and the sellers the demand and the supply was in balance. So it's as if the market waited for something for almost 3 weeks. And then all of a sudden, it started moving. So there was most probably some news that did it. And how serious was that? And then you have to decide, right, if the price goes back towards the 21 and it gets to it, or close to it, within 10 pips from it, I'm gonna get in. And make it a 2.5 to 1 or a 3 to 1 sort of ratio. You can do that. But as I said, you must go back and see on previous news what effect similar news had and things like that. So it's not that easy. But if you just stick to the normal rules, you will be fine. Like there was one that I wanted to show you. Yes, can you see that little tails to the top? It tells you the buyers wanted to take it up, but it did not. So the sellers are still in command. Here the sellers failed to take it further down, but then eventually they did. But what I look for at the end of the run, and that's what I want to show you here with this last one. Can you see that huge MACD divergence? Price is coming down and the MACD is going up. That's where, and there was also this I think that's a weekly trend line. I've done it in different colors. Yes, that you can see right there. It honored it. And as well as the weekly 200 was also there. So that already told me there's something. And then the price closed above. The 21 went up, come down, and started going up. Right there. That's where the entry was. Towards the 89, and eventually it went all the way past it towards the 200. And then it pulled back to this long-term trend line again here, trend line, support line, and then it started moving back up again. There you can see the pullback towards the 21, and it start moving towards that upper trend line, that upper, I keep on saying trend line, that upper resistance line, or supply or demand line. Look at this, 1.17 exactly. I think it was almost, you look at the bottom, it was almost 1 pip to that level. And I know a lot of people went short there because they saw that. When that closes and you put your stop up there and it's 58 pips, because that seems to be the level, but to me that was always the level. That's where I made my recovery back to positive. It was on that news on Friday afternoon. Not a lot of perps, a little bit here, a little bit there. I've got a different strategy that I use, which I'm not going to share with you because it's going to make you totally confused. I want you to keep to this market rhythm situation. Right, for me to recap, and that is, if the price is ignoring the moving averages, like the 200 and I just want to scroll back so that I can get some better example for you people. Look at that up there. The point is that was obviously news driven. How do you get into something like that? it's very difficult. I normally switch to the 1 minute, and then I'll take it from there on. And make sure that I have on the 1 minute at least a 4-to-1 risk-reward ratio. Because the 1 minute takes you out just like that. But if you have a 4-to-1 risk-reward, let's say, let's just quickly go to the 1 minute. And I just want to... Okay, let's say that one coming down there. That was news driven. I will enter there. That's about 4, 5, 6. Let's make it 6 pips. So I need at least 24 pips. And there I would have get it. So it gives you 4 chances to be wrong and 1 chance to be right, and you equal your amount of then you equal yourself out. So out of 10 trades, you can be now I must get my maths right. If it's a 4-to-1, it means 8. You can be 8 times right and 2 times wrong. Now, if it's 4-to-1, yes, 4-to-1, you can be 8 times wrong and only twice right, and then you still equals out. If you do 8 trades in a row and you are twice right and 8 times wrong, so that's out of 10. You equal still. That's why I always say you must go for a 2-to-1 risk reward, because with a 2-to-1, it means if you risk 1,000, or let's make it $100 on each of your trades, it means that on 10 trades you risk $1,000, because it's 1,000 that you put on each trade. But because you have a 2-to-1 risk reward, it means you can be 6 times wrong, and you're only losing 6,000, because the other 4 times that you are right, you make up 8,000, because it's a twice reward, so you still make money, even if you are 6 times wrong. So you need to work that out for yourself. If you put in $1,000. Let me quickly show you, especially for the new guys, that they can see what I'm trying to say. I think you people will understand it. Let's make it $100. Right, this is your risk. I mean, for 10 trades, you risk 100 per trade. And now, you've got a 2-to-1 risk reward. Let's say that one was wrong. Your first 8 were wrong, and your last 2 were right. So that means sorry, that must be right. That must be right. So your first 6 were wrong. So that you lost. That's 600. This 4 you were right. So that is minus 600. This is plus 800. So you're still making money. But it's much easier said than done, because if you have six wrongs in a row, it really plays havoc with your emotions. So you need to have that under control as well. And That only comes with starting with very small and start building it up. That is the very main focus that you have to get yourself controlled by, because otherwise you're really going to have some problems. Go that far back. Trying to get where it moves between the 200 and the 89. I had it. Here's a little bit one, but it's not 100%. But you can see how it honor that. You can see it sort of ignored the moving averages. Then it looks for a support or a resistance area or line, or a support or a demand area or a supply area. So right over there, that's where I would have get in there, and there. And even on that one, when I see something like this, I don't even wait for the candle to close. I put a limit order in there. I won't do it at night, as I said, when I'm at sleep. But when I can watch it, I will do so. I'll put an alert in right over there. Got that alert that will alert me when the price gets into that region, and then when it gets there, I know I have to come and have a look, and then it normally gets triggered, and then I can watch it from there on. Another thing that I want to share with you is, look at that price, that 4-hour candle. It closed at that, you can see there, it went right through that top there. Why would they close it right at that candle? Oh, sorry, right at that upper resistance line? Because that's where the orders were. Most probably it went very quick in that last. Yeah, you can see there. Okay, it was news driven. I've got no problem with that, but they knew this thing is going to come down, so I won't be surprised when we start up on you see there, they knew it's going to come up, sorry, it's going to come down, and that's where the big guys, that's where they prepared to put their orders to come short. And when we starting on Monday morning, I won't be surprised if we're going to see a little bit of a correction, then coming down to this bottom level. So this guy might have been right, but I mean, I'm not trading that way, so I was very cross with myself. As I said, this last 2 weeks, actually 3 weeks, was not that easy to trade. But if you really stick to the guns, there's 1, 2, 3. You see that little tails? Actually 4. From there till there, there's 20 pips that you could have made there. There's a 1, 2, 1, 2, 3. Eventually it was also 20 pips. So another thing is when you start trading, is also look for the 2 pivot points to the left of, or to the left of the one that you are, or the closest to pivot points, and look what they have done and what their levels is, because that is what price, people like boundaries. You see, I'm just drawing that. I count those 2 as 1, not as 2. 1, 2, look at that one there. If you do that, just that, because that's part of the decision making of people. that is a barrier that that's been set there. Even if it's in the mind, there's a breakout, pull back to it and start moving away. And from the 21 as well. So that was also an entry point. It's easy to talk afterwards, but you have to, people don't spend enough time in practicing this whole thing. If you scroll back and you just press F12. Okay, let me just, you see that little thing there, just move it a little, no, it's not there. I must shift it here a little bit. Okay, that's it. Just press F12 and then you will see and shift F12 takes you on back. So that would have been, that's what you would have seen. Would you have entered long there? I surely would have. You see, and that is what you have to decide for yourself and say, right, though, this is how I'm going to do this. I can't remember who was the guy there that said, but he made a break even. Now, if you planned to come out break even and you achieve that and you stick to the plan for that, then to me that's a winning trade. It's not a winning trade in terms of money, but it's a winning trade in terms of your decision making and your discipline. That's one thing you have to look after as well. You have to look to see, do you stick to your plan? And if I did not stick to the plan to recover here, well, I would have recovered later on, but that's not the point. But I should have never listened to that guy. So what I'm saying is, if you're making money and you're constantly making money, don't change it. See for yourself whether you can't change your position size or your capital first and then your position size. Don't, if you only have $200, risk 20% of your capital. That's not going to work. I had, at one stage, I had 11%, almost 11. And that's why I started reducing it by selling off of that position and then started going long, on this candle. I went, no, sorry, it was on that one. I went long and then I came short there. And eventually I broke just with a couple of euros above break even for the week. So let's see what the week that is coming. These numbers that you see here, it's just when I sometimes go to the 15-minute or even the 5-minute. It just shows me that is where the 21 EMA is on the 4 hour. That's where the 89 is. You see, so now I have to adjust that. Okay, so that is basically what those numbers means. It just shows you that I don't lose sight of the 21 EMA. That doesn't matter on what time frame I am. So that when I make a decision after 15 minutes, I still keep that into consideration. I have to. So if this thing pulls back there and it starts moving away from it, if this starts pull back there, start moving away, I still have to honor this 21 EMA. Okay, I hope you find this information a little bit more clarified in terms of the market rhythm. I don't think I've said anything new. Volatility is totally different, and even stop losses, you cannot use the stuff that I've posted there on 2006 and 8 and 10, somewhere around there. Because the whole world has changed, the whole market has changed, so you have to see what is going on right in front of you. And then you've got to make a decision. You have to adjust your position size and your stop loss to manage your risk. If you can manage your risk and keep at least a 1 to 1.5 risk reward, you will make money. Because a 1 to 1 risk reward, if you make 10 trades and you make 6 wrong and 4 right, you break even. So you can make 6 wrong trades and only 4 out of that 10 correct with a 1 to 1 risk reward. A 1 to 1.5 risk reward, and you break even. So the moment you start doing better, even a 60% win ratio is actually very good on Forex. I know there's people claiming 80 and 90%. I don't agree with that. Right, so let's see what's coming this week, and so I've used I've moved my videos to the YouTube channel that I've created, because Forex Factory does not support the files anymore that I used to record on, and so I hope you people find this in order. Thank you.